welcome to part 2 of our PPP loan forgiveness calculator tutorial. Hey, we left off talking about the 4 questions that you need to ask yourself. Are you spending enough on qualified expenses? Are you employing enough people? Do you pay your people enough? And have you, if you had to answer no to any of those questions, have you fixed the problems by the end of your 8-week period or June 30th? All right, let's jump right into the payroll question. Are you spending enough on qualified expenses? So tab number 1 of the calculator Excel file is the payroll calculator. And man, this gets really detailed because payroll is the heart and soul of the PPP program. After all, it's the paycheck protect. Easy for you to say. It's the paycheck protection program. So you'll need your payroll reports to do this sheet. And if you'll start with filling out the parts in blue to match your payroll, you'll have an easy time. So payroll costs, as you may recall, include salaries, wages, commissions, sick time, vacation time, family leave, medical leave, any wage that you pay to your people, any salary, any wage, any hourly rate, any cash compensation. Tips are even included in this. So there's only one rule, and that is that if you pay any one person greater than $100,000, the amount above $100,000 is not a qualified expense. So if you're the president and CEO and you're taking home a $200,000 salary, then only $100,000 of your salary counts towards the qualified salary expenses for the PPP. Okay, don't throw it out completely. I've had customers do that. They say, well, I'm making more than $100,000, so my payroll doesn't count. That's not true. If you're making more than 100, only the part over 100 does not count. Everything up to $100,000 is a qualified salary. So put all that in there. State and local taxes. Let's talk about that for a second. Typically, this means SUTA, state unemployment taxes. I've heard from people in other states that it also might include state income tax if the employer pays it and only the part that the employer does pay. So if your business is required to pay something in addition to gross wages, then that's what you put in this box for state and local taxes. Now, you're not supposed to put in here FICA or FUTA. Why is that? Well, the SBA doesn't want to give you money that you're going to turn around and send back to the federal government. That makes sense, right? I'm not going to loan you money that you're going to pay to me, so you have to come up with that money separately. I will, however, loan you money that you're going to pay to your state or your city for state and local taxes. Finally, healthcare premiums and retirement benefits, both of those are counted in there, except for one important exception. In my case, unfortunately, I got dinged. The QSEHRA, that's the Qualified Small Employer Health Reimbursement Account. If you use one of those, your company contributions to the QSEHRA are not qualified expenses and cannot be included in this calculation. Other FSA, HRA, HSA expenses we believe can, pending further confirmation from the SBA, which ought to be coming late this week, maybe tomorrow. All right. When they do, I'll catch you up. Don't worry. Finally, part number 3 for the wages is forgivable non-payroll expenses. So, sorry, it's not the wages, it's the other 25%, right? Rent, utilities, mortgage interest, and interest on other debt. So 100% of your rent that you pay during the 8-week period, 100% of utilities, that can include cell phone or regular phone. It could include trash takeout if you have a trash service that services your office during the 8-week period. I believe you can include trash. So then with mortgage interest, if you're not paying rent, but instead you have a mortgage, you can calculate just the interest on the payment, not the entire principal payment. You'll have to get your banker to break out the payment between interest and principal and get a bank statement to support that, please. Interest on other debt. This is not perfectly clear, but we believe that the SBA will allow you to break out other interest paid on other personal property debt. That is debt that is used to purchase equipment or vehicles or anything that makes your business tick. Okay, so that's the 25%. And finally, the calculator will add up and tell you what your total number that might be forgiven is. That is, how much have you actually spent on qualified expenses? That would be qualified to be forgiven. Okay? And with that, if you've got all those details, you're done with step one, and you'll know whether you're spending enough on qualified expenses. If you are, this bottom line 23 ought to match the top line number 5, which is how much you borrowed. In this case, my example here, they borrowed $1 million. They only spent $920,800. Guess what? They left $80,000 on the table. They could use that money to hire additional people. Maybe if the numbers work out right, they could use that money to pay rent or utilities. So this instance, they'll have a refund, or sorry, a forgiveness amount of no more than $920,000 because that's what they spent on qualified expenses. Okay, that's part 2. Jump into part 3. We'll keep going.